All right.
All right, everybody. Good afternoon. You have Dave Lukas and Doc Severson here of 12minutetrading.com. And today is Monday, the 26th of September. And this is our live market update. So we're going to be here for the next few minutes. We're going to give you our view of what we see happening in the market today. There's a lot of stuff going on. So stick around for a few minutes and we'll get right to it here. How's it going, Dave?
Hey, it's going good. Hey, everybody out there. Man, I'll tell you what, Doc, it's been an interesting day with the movement that we've seen. We're just talking about it, and we are just having a rally right now at the end of the day. We dipped down to those lows. Now we're having this rally up higher, and it looks like the shorter term charts are releasing their energy to go that way. But what do you think? Can we get back above those starting points for the day? You think we can get back up to the 3,700 level before close today?
We were somewhat strong this morning, but we've been taught to learn, or we've been taught to ignore what happens in the first hour, the amateur hour of the day, and then pay attention to what happens in the last 90 minutes. So this little rally started at about 2:30 in the afternoon. So that's about 9:30 or 90 minutes before the closing bell here in Eastern time. And so we're getting a little move now. The price is right at the bottom of the opening range. So that could be hitting its head. But we're also seeing, and we'll look at the charts here in just a second once we get going. But what we're seeing is this could create almost a tweezer bottom for the price on the daily chart if it's able to hold these levels and close higher from this.
Two times we've come down now, Friday and today, to that in the 3640s, and each time towards the end of the day, buying has happened. Obviously Friday we were down 110 points at one point, plus 110 handles going into the 3 p.m. hour, and then we bought all the way back up. We're still down 64 points, which is not great on the S&P, but still to get bought back 50, 60 points into the end of the day, that's a pretty good move off of that. And so I wonder if we're going to see something similar today. In spite of all the turmoil we got going on with currencies around the world. We can get into that here in a minute too.
Now, Dave, you've been part of the markets for a good 20 years now. Have you seen any scenarios that have been as negative as we've currently been experiencing? I mean, just encompassing everything, just the political and the monetary uncertainty out there.
This is such a weird time, and the reason I say that is I've seen a lot more fear. Like 2008 had more fear. And we ultimately capitulated, and that was where, everybody was throwing in the towel, right? We haven't done that yet, and we still could do that from here. But this is like one of the most orderly sell-offs, over the course of a year that I've really ever seen. And the other thing too that is strange about it is there are the forces that are, it's almost like a self-fulfilling prophecy, and it's like the things that are being done to exacerbate it are like, it's common sense that these are not the things you should be doing, and we just continue to do them. So I'm not saying it's deliberate, but I'm saying it's very shocking to, for example, stop pumping oil in the midst of an energy crisis, or double down on spending more money when you've got a problem of having spent too much money, and that's causing your problem. And the meanwhile, the Fed's trying to fight it, and they're raising the fastest clip in the history of the Fed in a 6-month period, and they're not slowing down to even let any of that take hold. And as usual, the Fed's probably going to go too far and do too much damage, and it's going to be unnecessary. It just seems like they never ever learn.
Is there ever a time in history where we have raised interest rates during a recession?
I'd have to go back. During Volcker's time would be about that time, right? We had an 18-month recession, although the raising rates caused it. But the during that time was it, the Carter years. The funny thing is if you look at the Carter years from like the early 70s through the 80s, the market actually went nowhere. We had 30% swings up and down, but start to finish, the market ended up going nowhere. And heaven forbid that may be what we're going into now, which is great for iron condor trading and a lot of things we do, right, but it's not fun for the average investor, So again, it just amazes me that the solutions are staring people right in the face, but they're not taking advantage of
I,
it,
I think
both
part
on
of
a policy side and a monetary side.
part of what we're seeing is that I think there's sort of an academic and a bureaucratic answer to things that is being tested right now, and it's quite honestly not working. And then there's the street side of things, the street smart side of things, the the financial markets and their view on things, and they're completely opposite between the two. So
it's crazy too. Like today's a huge day. Like you just had this election in Italy, that now has elected somebody who basically wants to throw out anything from Brussels, right? So Italy may leave the euro on this, right? And I've been saying for a long time that the euro, after Britain, kind of pulled out of, and they didn't use the euro, but they pulled out of with Brexit and everything else. It's like dominoes falling, right? When's Germany going to go back on their own, right? Because they're the only thing propping up the whole euro right now. And at the same time, now is kind of that time. And this goes to the currency issues that we're having. Like, so anybody who is watching, like overnight last night, the Great British Pound hit its lowest level to the US dollar since 1985. Since 1985, like almost 40 years. And that's because of what Powell's done, hiking rates so fast, the dollar hasn't increased. Now, it also makes the markets go down because a stronger dollar hurts like multinationals and others, and that makes markets go down too, along with gold and metals and stuff, because the dollar is getting stronger, right? Well, the problem is right now it doesn't mean much to us in the US and that sort of thing, because we're the reserve currency for now. It's a conversation for a different day. But the bigger thing is all these other countries that have to have dollars, because you have to buy oil in dollars and other things. Now their currencies are getting crushed. And so, you got Japan intervening in the middle to bring the yen down to a better parity with the dollar. You got the British now having to deal with that. And this is like dominoes starting to fall. And it's going to cause a ripple effect through the markets from a currency standpoint and everything. And you may end up seeing the central bank of the United States actually step in and start buying other currencies to stop this from exacerbating. Because if it does, it's gonna really, really usher the rest of the world even faster into a bigger recession. And so there's a lot of ramifications to what these guys are doing on a macro scale that maybe they just don't care. But it's not good. Let's put it that way.
I don't think history is going to judge this period of time very kindly to some of the monetary policy going on. I mean, it's. We go back a year ago and we say, are you kidding? Transitory inflation? You're got to be kidding. No, you're not serious, right? Transitory inflation? Have you been shopping lately at all? Have you tried to buy anything at all? Transitory inflation? Okay. Well, I guess you know what you're doing, right? So
just think about if we had just started a quarter point here, last year, even in the summer, how much easier things would be on the markets, on people, on everything, if they had not been too scared to do what really needed to be done.
And think about it. It's almost like, when you're a little kid, it's like you put off something, you put off something because you're scared of doing it, And then ultimately you put it off for so long, it becomes a huge issue that you have to own up to.
Right.
And so that's just what we're seeing from the Fed right now. The Fed is like doubling down and saying, okay, we've lost all credibility based on our stance from last year. So now we're just going to put the blinders on, and by God, we're going to make this thing happen. And we're going to do it our way. And
that's an ego thing.
It is. It's an ego thing. It's like it's become, we see it happening. It's like a train wreck happening in slow motion.
Yeah, and it's this is the history of central banking. I don't know. A lot of people don't know there were 3 central banks in the United States before the Fed, and they all failed. Central banking typically ends up failing in the end. So it's because you try to control market forces and control the laws of economics, and eventually they catch up with you. Reality always wins, right? So the Fed's in a really bad position, because they can't stop the politicians from printing and spending money. And because of that, inflation continues to go up and will continue to exacerbate. And at the same time, if they keep jacking rates the way that they're jacking rates, all of a sudden the 31 trillion in debt isn't just a few hundred billion in interest. It becomes $1 trillion in interest, $1.5 trillion in interest, and so on. And that's half the tax dollars coming into the United States to pay for that.
Something
And so
else that I have not heard anybody talking about yet is we've got a little thing called a midterm coming up in 5 weeks.
That's true.
And if we are still down 24% on the S&P in 5 weeks from now, when people start opening up their 401k statements, there is going to be hell to pay. And so somebody's going to get tapped on the shoulder, I would say, before too long to say, is there anything that you can do? Because you're making us look bad. And so I'm waiting for that time.
And that's the thing. There's no Fed meeting in between there. The data is going to be the data, right? So market's kind of left to its own devices between now and then. So
there is one.
Interesting.
There is one on November 2nd. So it's right before.
Well, the day before the election, but I don't think that's going to be able to have any effect on the election.
Yeah, that's probably too late by then.
Yeah. So it's
Do you know that we have 21 different Fed speaking events this week? 21.
I know they're already putting them all out there and everything. And some of the things they're tone deaf based on some of the things they're saying. I've been putting them out on Twitter. If any of you guys watching want to follow me, at Dave Lucas Trader on Twitter, I try to post these things and put some commentary around these guys. Because some of these guys are like, yeah, we know jobs are going to get lost. Okay. Like, that's nice, but you guys understand, what you're doing to people's livelihoods and stuff. I mean, it's tone deaf half the time.
Yeah. It's like high fuel prices. Just get an EV. Just get an EV.
which is now actually proven more destructive to the environment than a typical car. So
I'm gonna share some.
I'm
gonna share some chart action here for just a second, and hopefully you can see that. Yes.
Look at that. We came right up there.
So here's this is what I look at on a daily basis. This is the opening range that sets up, and it's very important too. The upper blue line is the upper expected move. The lower blue line is the lower expected move. So we know on a statistical basis. So this is going to be really, really important for the price to get above and beyond this point and reclaim this area. If it's able to do this in the last 50 minutes, I think there's a very good chance that we end up closing flat for the day. Now, what would that mean is that we'd have this enormous set of tweezer bottoms here. And let's see, this is not quite as big as the ones back from January into 2008, but it's going to be close. This could be a bottoming signal. One of the reasons that we're seeing potential consolidation down here is that we're going to be dropping all these candles off the back here. We're going to be left with a 400-point S&P move. That's 10%. We've dropped 10% in just the last couple of weeks, just like this move was 10%. So we're getting back-to-back corrections in the middle of a bear market. So it doesn't get any worse than this right now. And so normally when something gets that bad, you'll see it go in the opposite direction, at least for a period of time. Now, I don't know if you want to pick up the ball from here, Dave, because what we're seeing is potentially we've got some bigger signals that may kick in as we get into October.
Well, I'll take over and I'll show a couple things too. And I was sharing this with my students in our newsletter yesterday. And actually, here's what's going on right now, guys. You can see this is actually a 5-minute chart, 5-day, 5-minute chart. And that energy is starting to kick off. See how it was charged up and it's starting to head down. And that's what's kind of pushing into the end of the day. So we've got some room to go, but it's going to really have to fall down to here and bleed this out and get up to there to get back into that range that Doc was talking about. It's really close. It's sitting on it right now. But the thing that I talked about, and I think this is probably one of the most important things right now, is the weekly chart. So Doc just showed you the daily chart, which is exhausted and is at a point where it needs to pause or either, and to charge that chart back up, it can either go right back the opposite direction. That would charge it up the fastest. So you think of a relief rally, maybe 150 points or so on the next 4 to 5 6 trading days. It can go sideways, which will take some more time, or it can slowly grind down, right? Just really, really, really slow, keep creeping downward. And the thing that I was talking about this weekend is coming into this week, we had this weekly chart energy charging back up. So we're going down, right? And this weekly chart energy is diverging. It's charging back up, which to me would signal, oh, well, maybe this is where we are going to put in a bottom, right? Charge this back up, get ready to run into the fourth quarter. Maybe we do another one of these, right? Get another one of these type moves. But as you can see, as we've switched from week to week today, it's now flipped down. And once this starts to get below 50 and it's right at 49, that starts to confirm for me the trend. So that tells me like this starting here, right here, heading down is the beginning of a weekly swing lower. And these can go for 8, 10, 12 weeks. And you'll have up weeks in there. Doesn't have to just be down weeks, but there's a lot of energy left to go right down to the floor here and take this all the way down to S&P 3,200, 3,000 range if it wants to go that far. And so this is the chart to really watch right now. I won't call it yet because 49 is right on the bubble. This thing gets to like 45 and continues to sink down below here, gets in the 3,500s and stuff. Then it's going that way. And that's a good time. Sell some call spreads, follow it down, buy some puts, buy some of the VIX calls, things like that to take advantage of the move lower over the time, because once this freight train really gets going, it's kind of set in motion, right? And it would take some massive type of unpriced in news or event to stop it. So 2 of those coming up. October 7th, you have the jobs numbers, and bad news is good news. So if the jobs numbers are under what is expected in any way, right, or lower than expected, markets are going to like that. And then the next week you got CPI, PPI again, right? And so if the inflation number comes down any little bit, right, the markets are going to like that. And again, absence of Fed meeting till early November, then markets might have a reason to run. But those are big ifs, right, at this point in time. So as of now, we seem to be continuing the downward direction. So that's kind of the state of the state as we're looking at things now. So,
yeah, don't
forget thoughts on that?
Don't forget on Friday we have PCE, which is one that I never used to watch it and follow at all. But I've seen the market move because of the PCE, which is the inflation component of consumer spending. So watch for this Friday at 8:30. So that and the other 21, Fed events that we get this week.
Powell speaks tomorrow and then later in the week, right?
Yeah. Tuesday and Wednesday, Powell speaks, which I don't know what he could possibly say at this point, but.
Well, the only thing you may get based on where we're at with the daily chart is if he gives any inkling of hope in any way, you might see a little bit of a relief bounce or rally.
Yeah.
Yep.
Yeah. So far they've been avoiding saying anything like that because it's almost like they don't want to give out the candy just yet. So, because again, they have a huge credibility problem and they will take this too far. That is the problem. Just because of stubbornness and ego, they will take this too far and say, I told you so.
I can say this. I can say this regardless of all of this stuff going on and everything that's happening. My target 100s are closing out, and those trades are that strategy is working really well in this environment. I know you're in it every day. What are you seeing with that? Pretty consistent?
Yeah, we're getting, obviously the call spreads have been super easy lately. We've been in and out of those in literally one day. And, quite honestly, we've had difficulty filling the put spreads just because there haven't been enough granularity of options with the level of distance that we can get. We're selling these things a mile out of the money, which is nice. But sometimes they're missing the strike prices down there because they're not as far down as we want to be. So, but in either case, it's been a relatively, considering the price action, it's been relatively easy to trade this, especially as the downtrend continues. It's always the toughest part is always when you transition from an uptrend into a downtrend. That's always the toughest transition. So as long as you take care of business on that, you're good to go.
Yep. And now we're kind of squarely in it. So it's been pretty pretty consistent. Got to follow the rules, got to be disciplined. But we were just talking before about profit taking and stuff like that. As long as you're not too greedy in this market with these type of trades, you should do pretty well.
Okay. Anything else, Dave? Any closing comments for this week?
No, I continue to watch currency markets, continue to see if they settle down a little bit. If they continue to exacerbate, the dollar continues to go higher against the different currencies out there, you're going to see some real fireworks happening. You're going to see a lot of central bank movement, potential intervention and stuff. That's your kind of big thing. And then watch Credit Suisse. Credit Suisse is having a lot of problems right now. They're pulling out of the U.S. It's a big bank out of Switzerland and in that area. And they are, a lot of people are saying, are they the layman, right? So watch that as well. Look for news on that.
Okay. Well, thanks, everybody. Thanks for whether or not you're joining us here live or whether you were catching this on the replay in the next day or two. Appreciate it. Thanks for checking us out. And make sure you hit the subscribe button so that you get notified, and hit the bell for notification on there, so that you will be emailed next time we go live, because typically we do this without notice.
Comments, guys. We'd love to hear from you. So please, give us your comments. Let us know what you think, and let us know what you guys are thinking. We can, what do you guys want to learn about? We'll happy to share our knowledge with you.
Okay. Hey, everybody, take care, and good luck out there with this trading. Let us know how we can help. Adios, everybody. Bye.
Bye.